If you were born before 1961, the day you turned 65, something quietly shifted in the fine print of American law. You became legally exempt from a whole stack of bills, fees, and taxes that you were almost certainly still paying today. And nobody whose job it is to collect that money is ever going to call and tell you to stop. I want you to sit with that for a second, because this is the single most expensive misunderstanding I see, year after year. Turning 65 did not just make you eligible for Medicare. It moved you into an entirely different category of American, a category the federal government, your state, your county, your bank, and several other agencies are required by law to treat differently. There are bills a 45-year-old has to pay that you no longer do. There are taxes that shrink, freeze, or disappear the moment you cross that line. There are fees your bank is quietly still charging you that a senior account would have wiped out years ago. But here's the catch that costs people thousands every single year. Being legally exempt and actually not paying are two completely different things. The law does not refund you automatically. Nobody at the county mails you a check on your birthday. The agency pulling that money out of your account every month is not going to send a letter that says, "Congratulations, you can stop now." You have to know the exemption exists. You have to know the form. You have to make the call. That gap between qualifying and claiming is the reason most seniors who are fully entitled to this money never see a dollar of it. And before you decide this video is not for you, let me shut down the two dismissals that cost people the most. Some of you already think a list like this is only for low-income retirees. So if you own a comfortable paid-off home, you tune out. Others assume the opposite. This is only for the wealthy with big estates and fancy accountants. So if they live mostly on Social Security, they tune out too. Both are wrong. Both are leaving money on the table. Some of the fees on this list help the retiree on Social Security the most. Others are worth a small fortune to the person sitting on a home that doubled in value. On every single one, I will tell you exactly who it helps the most, so nobody watching can honestly say, that part is not for me. There is no late notice on this kind of mistake, no penalty, no alarm, just money quietly leaving your account, every month, every year, that never had to leave at all. That is the most expensive kind of mistake there is, because it is invisible. Today we make it visible. 6 fees, one at a time, in plain English, with the exact thing to ask for on each one. And the 6th one is the biggest of them all, and one of the easiest to claim. Stay with me to the end. Let me tell you who I am, and why I am the one sitting here telling you this. My name is David Taylor. You are watching Senior Money Brief, and I spend my days doing one thing, reading the fine print on the rules that decide how much of your own money you actually get to keep after 65. The most painful pattern I see is not the folks trying to cheat the system. It is the honest person in their 60s, 70s, and 80s who has done everything right their entire life, worked the job, paid the taxes, raised the family, and is now paying bills they were legally exempt from 3, 5, sometimes 10 years ago, simply because nobody ever sat them down and told them which form to file. No late notice, no penalty, just money quietly leaving every month that never had to leave at all. So today, we fix that. Here is the roadmap. Fee number 1 comes straight out of your Social Security check before the money ever hits your bank. Most people don't even realize they are paying it. Fee number 2 is the biggest yearly bill most seniors carry, and there are 3 separate forms stacked on top of each other that can cut it down or freeze it in place. Fee number 3 is a tax you may have legally stopped owing years ago and kept paying out of habit. Fee number 4 is a set of monthly bills the system already decided people your age should not carry alone. Fee number 5 is what your bank has quietly been charging you to hold your own money. And fee number 6 is the biggest of them all, a hard ceiling on a cost that used to have no ceiling at all. Stay with me to the end for that one. Let's start with the one hitting your check every single month. Fee number 1 quietly bleeds seniors the most because it is pulled out of your Social Security check before the money ever lands in your account. Most folks forget they are even paying it. It just shows up as a smaller number every month, and after a while you stop questioning it. I am talking about your Medicare Part B premium. In 2026, that premium sits around $185 a month for most people. That is over $2,200 a year, gone, automatically, silently, before you get to touch it. Now here's what almost nobody is told. There is a set of programs called Medicare savings programs, and if your income is under the limit, Your state will pay that Part B premium for you. Not lower it, not discount it, pay it, which means that $185 stops coming out of your Social Security, and your monthly check goes up by exactly that amount. For a lot of seniors, that is the single biggest raise they will get all year, and it does not come from Congress. It comes from a program most people have never heard the name of. The help reaches further than just the premium. There are 3 tiers, and they go by initials: QMB, SLMB, and QI. The most generous one, QMB, does not just cover your premium, it wipes out most of your Medicare deductibles and copays on top of it. So the surprise bill after a doctor visit stops landing in your mailbox. Here's what genuinely bothers me about this one. The income limits are far higher than people assume. A single person can have a monthly income up to somewhere around $1,800 and still qualify for one of these tiers. For a married couple, that number climbs into the $2,400 range. A number of states do not count your assets at all anymore. Your savings, your paid-off house, they do not disqualify you. And despite all of that, this is one of the most underclaimed benefits in the entire federal system. Millions of people who qualify today are not enrolled, purely because no one ever told them the program existed. So do not disqualify yourself at your own kitchen table. That is the mistake people keep making. They do the math in their head, decide the answer is no, and hang up on money that was theirs to take. Let the application do the math. Who does this help the most? Anyone living mostly on Social Security, but it also reaches middle-income retirees who assume they earn too much and would be shocked to find out they are inside the window. Here is the action, and it is one phone call. Call your local state health insurance assistance program. Most people call it SHIP. It is free. Every state has one. They will screen you and help you apply. You do not need to know which tier. Just say, I am on Medicare, I am on a fixed income, and I want to know if I qualify to have my Part B premium paid. That one sentence is enough. That one call, for the right person, puts over $2,000 a year back in their check. And while you have SHIP on the phone, ask about a program called Extra Help. In many cases, getting approved for a Medicare savings program automatically enrolls you in Extra Help. I will come back to that at the end of the video, because it is bundled right into the biggest fee on this list. That was the one pulled from your check. The next one is pulled from your home. Fee number 2 is your property tax bill, and pay close attention to this one, because the biggest dollars on this entire list are hiding right here. This is not a small monthly line item. This is the biggest recurring bill most homeowners will ever pay on a home they already own. The mortgage can be gone. The house can be paid off for 20 years. The county still sends the bill every single year like clockwork. And here's what almost nobody explains. There are 3 separate forms stacked on top of each other on your property tax, and most homeowners over 65 do not have a single one of them filed correctly. Not one. The first is the homestead exemption. It takes a chunk of your home's value right off the books before the county ever calculates what you owe. In Florida, that chunk is $50,000. In Texas, it is $100,000 off the school portion of your bill. Every state is different. In nearly every state, it is real money. And here's where people get caught. Most homeowners assume the homestead exemption is automatic, that it kicked in the day they bought the house. In most states, it is not. You have to file a 1-page form with the county, usually before a spring deadline. File it once, and in many states, it stays on for as long as you own the home. Miss it, and you pay the full bill that year for no reason at all. The second form sits right on top of the first. It is the senior exemption, sometimes called the age 65 exemption. Most states that offer a homestead exemption also offer an additional one that kicks in the year you turn 65. And this is the one the county will almost never mail you on its own. It is a separate application, and you have to ask for it by name. In Texas, every homeowner 65 and older gets an additional $10,000 off the school portion. In Florida, the senior exemption can be another $50,000 on top of the basic $50,000, doubling the wipe-off. And here is where comfortable retirees wrongly tune out. They hear the word senior and assume there is an income test they will fail. But in more than half the states that offer this, there is no income test at all. Texas, Florida, Georgia, Tennessee, Alabama. You turn 65, you file, you get it. The third is the most valuable of all, and it is the one the county talks about the least. It is the senior assessment freeze. When you turn 65 and you file the freeze application, the county locks in your home's taxable value at whatever it is the year you apply. From that day forward, it does not matter how much your neighborhood appreciates. Your tax is calculated on that frozen number. In Texas, once you file the over 65 tax ceiling, your school district tax is frozen at the actual dollar amount you paid that year. Your home can double. The bill cannot rise. Picture two neighbors on the same block, same house, same year built. One of them, when he turned 65, walked into the county office and filed the freeze. The other never heard the form existed. 10 years later, the neighborhood has tripled in value. The neighbor who filed is still paying tax on the value his home had at 65. The other is paying on every dollar of appreciation and will keep paying for the rest of his life. Same house, same street, two completely different tax bills. The only difference was one form. Who does this help the most? Everyone. The homestead helps the lower-income homeowner in percentage terms, but the freeze is worth a small fortune to the person sitting on a paid-off home that tripled in value. And if you are renting, do not click away either. Your landlord pays that property tax and passes every dollar of the increase straight into your rent. Here's the action. Call your county appraisal office. Ask 3 questions, by name. Is the homestead exemption on file? Is the senior exemption on file? Is the assessment freeze on file? If the answer to any of those is no, ask which form adds it and what the deadline is. 1 phone call, 3 questions, thousands of dollars a year. The next fee is the biggest monthly surprise because you have probably been paying it every April without realizing you legally stopped owing it. Fee number 3 is a tax you may have legally stopped owing years ago and kept paying anyway, out of pure habit. And I want you to hear this one carefully because this is the single most common and most fixable money mistake seniors make after 65. Not fraud, not theft, just quiet overpayment year after year to an agency that was never going to knock on your door and tell you to stop. Let me explain what actually shifts in the federal tax code the moment you turn 65, because most people have no idea how much moved on their birthday. Every filer in America gets a standard deduction. That is the chunk of income the IRS agrees not to tax at all. But the moment you turn 65, the tax code gives you an additional standard deduction on top of the regular one. It is a second, completely separate bump, and it has been sitting in the law for years. You do not have to itemize to get it. You do not need a mortgage or a shoebox of receipts. You just have to be 65. If you are married and both spouses are 65 or older, you both get it, stacked on top of each other. And that was already the case before 2025. But starting with the 2025 tax year, on top of everything I just described, there is now a brand new bonus deduction of $6,000 for every American 65 or older. It is not instead of your standard deduction. It is on top of it. It is on top of the age 65 add-on. And if you and your spouse are both 65, that is $6,000 each. $12,000 as a couple, layered right on top of what you already had. It runs through 2028, and it phases out at higher incomes. The full amount is for single filers under $75,000 and couples under $150,000. But for the vast middle, this is real money taken straight off the amount the government is allowed to tax. Put all of it together, and a large number of people over 65 owe far less federal tax than they believe they do. A meaningful number owe nothing at all. But here is the trap. Those same people keep over-withholding from their pension. They keep letting Social Security pull taxes out of every check out of pure habit. Or they hand their taxes to a preparer moving fast through a stack of returns who never stops to adjust for their age. And so they hand the federal government an interest-free loan every single year and call it normal. The people this hurts the most are the ones least likely to catch it. The 65-plus filer on a modest income, filing a simple return. That mistake compounds, not 1 year, 10, 15. Money that never had to leave, leaving, every April. Here's the action. When your return is prepared this year, before you sign it, do 2 things. Confirm out loud that both your age 65 additional deduction and the new senior bonus deduction were applied. If you use software, make sure your date of birth is entered correctly, because that is what triggers it. Second, ask whether your withholding should be adjusted going forward, so you stop overpaying every month for the rest of the year. And here's the part almost nobody mentions. If you already filed a return in a year you qualified and missed one of these, you are not out of luck. You can file an amended return using Form 1040-X and go back and claim it. The IRS will send you the difference. Real money, recovered from a year that already closed, because you now know the deduction existed. If paying somebody to file has been part of why you keep putting this off, you do not have to pay anyone. 2 free programs, Tax Counseling for the Elderly and AARP Tax Aid, will sit down with you and file your return for free. And they know exactly which senior deductions to look for. That was money the IRS quietly kept. The next fee is money the phone and power companies quietly kept. Fee number 4 is smaller in dollars than the first 3, but I am not skipping past it. Because it is one more recurring bill the system already decided people your age should not carry alone. And when you stack a few of these together, that is when the monthly number really starts to move. There is a federal program called Lifeline. It takes roughly $9.25 a month off your phone or your internet bill, and many states stack their own discount right on top of that, which can push the total noticeably higher depending on where you live. $9 a month is not going to change your life, but over a year, that is more than $100 back in your pocket for one application you fill out one time. And for a lot of seniors on a fixed income, that is not nothing. It is a couple of trips to the pharmacy. It is a light bill in a mild month. Then there is a completely separate program that goes by the letters LIHEAP, the Low Income Home Energy Assistance Program. This one is aimed at a bigger bill, the cost of heating your home in the winter and cooling it in the summer. Depending on your household, your income, and where you live, LIHEAP can put anywhere from a couple hundred up to around $1,000 toward that utility bill, usually paid directly to the utility company, so the money never even passes through your hands. Here's the part most people miss. When folks hear energy assistance, they picture the dead of winter and nothing else. But this program covers cooling too. The air conditioning that, for an older person in the summer heat, is not a luxury. It is a safety issue. And on top of that, there is usually a crisis piece. If you have a shutoff notice, or your furnace or air conditioner has quit on you, there are emergency funds set aside for exactly that. One warning on LIHEAP: the money is limited. When a state's funding for the year runs dry, that is it until it gets refilled. States hand it out first to the households they consider most vulnerable, and older Americans on a fixed income are usually at the top of that list. But you have to be in line. Do not put this one off until the cold sets in and the money is already gone. Here is the action. For Lifeline, ask your phone or internet company directly whether the Lifeline discount is on your account. Most can add it in a single call. For LIHEAP, dial 211. In most of the country, 211 is a free helpline that will point you straight to the office that handles energy assistance where you live. Free to apply. Nobody legitimate ever charges you a fee. Small bills add up. The next fee is one most seniors do not even realize they are being charged because it is buried inside an account they have used for 30 years. Fee number 5 is the one that quietly bothers me the most. Because it is not the government keeping money that should be yours. It is the bank you have trusted for 30 years, quietly charging you to hold your own money, and never once mentioning that there is a senior version of that same account with none of those fees. Let me walk you through what is actually happening inside a lot of these accounts. If you have a standard checking account, there is a very good chance you are paying a monthly maintenance fee somewhere between $5 and $25. Sometimes it is waived if you keep a minimum balance. Sometimes it is not. On top of that, some banks charge a fee if you want a paper statement mailed to you every month. Some charge for a safe deposit box. Some charge an inactivity fee if you don't use the account often enough. Some charge just to talk to a human teller more than a set number of times a month. None of this is illegal. It is written in the fine print you signed 30 years ago. But here's what the bank does not put in a birthday card. Most major banks, and almost every credit union in this country, offer what they call a senior checking account, or a 62+ account. And that account, for the same customer, on the same money, waives most of those fees. No monthly maintenance fee, no paper statement fee. In many cases, free checks, reduced or free safe deposit box, sometimes higher interest on the same balance. The requirement is the simplest one on this list. You have to be over a certain age, 60 in some banks, 62 in others, 65 in others. No income test, no application to explain yourself. It is a switch on the account. And here's what gets me. That switch is almost never flipped for you. The bank has known your date of birth since the day you opened the account. They see you turn 65, and they keep charging you the standard fee anyway, because nobody at the branch is required to walk over and say, you know, there's a version of this account with none of these charges. Would you like me to move you over? That conversation does not happen. So the fee keeps coming, month after month, year after year. $10 a month does not sound like much, but over 10 years, that is $1,200. Add the paper statement fee. Add a safe deposit box you have had since your kids were in school. Add whatever else has quietly attached itself to that account, and you are looking at real money the bank kept on an account that could have been fee-free the whole time. Ask about the safe deposit box. Many banks waive the annual rental for seniors. Ask about ATM fees on out-of-network machines. Some senior accounts refund those. Ask about the fee to cash a check drawn on their own bank. Some waive that at a certain age too. Here is the action, and it is one visit. Walk into your bank branch this week. Sit down with a banker. Ask one direct question. What senior or age-based checking account do you offer? And what fees does it waive that my current account does not? Then ask them to move you over. If they hesitate, if they cannot give you a straight answer, that is your signal to call a local credit union and ask the same question. Credit unions tend to have generous senior accounts and are usually happy to move you over the same day. That is 5. Now the 6th, the one I told you to stay for. It is the biggest, it is the newest, and it is one of the easiest to claim. Fee number 6 is the biggest of them all, and I need you to understand how big, because for years the cruelest part of the Medicare drug benefit was that there was no real upper limit on what you could be forced to pay. If you got sick, really sick, and you needed an expensive medication, a cancer drug, a specialty drug, the kind that runs thousands of dollars a fill, you could pay and pay and pay with no finish line, year after year. That is the thing that has now changed. Starting in 2025, federal law put a hard cap on what you pay out of your own pocket for covered prescription drugs under Medicare Part D in a single year. Because that number adjusts for inflation, for 2026, the cap sits at $2,100. Here's what that means in real life. Once your out-of-pocket spending on your covered Part D medications adds up to that $2,100 line, you are done paying for the rest of the year. Your plan picks up 100% of the cost of your covered drugs after that. Not a smaller share, all of it. For someone on a $500 a month medication, that is the difference between paying $6,000 a year and paying $2,100 and then nothing. Thousands of dollars of protection for the seniors who are the sickest and the most squeezed. And most of them still do not know the ceiling is there. Let me show you the shape of it across a real year. Say you take a specialty medication that runs several hundred every fill. You pay as you go through January, February, March, and your out-of-pocket total climbs. For a lot of seriously ill seniors, you hit that $2,100 line somewhere in the spring. And from the moment you hit it, every covered prescription for the rest of that year, from spring all the way through December, costs you nothing at the pharmacy counter. Zero. Now here's where this fee gets even smaller, and this is why I put it last. That $2,100 ceiling is the general rule. But if your income is limited, there's a program that pushes that ceiling almost to the floor. It is called Extra Help. Some people know it as the Low Income Subsidy. It is designed for seniors on Medicare drug coverage with modest income and savings. Extra Help can dramatically lower what you pay for your Part D premium, your deductible, and your copays on top of that cap. For qualifying seniors, prescriptions can end up costing just a few dollars a fill. And here's the piece that connects this all the way back to the very first fee. Remember that ship call I told you to make in Chapter 3? In many cases, getting approved for a Medicare savings program automatically enrolls you in Extra Help. One phone call. 2 of the biggest health cost breaks in the entire federal system, unlocked at the same time. Here's the action. Call your local SHIP office and ask them to screen you for both a Medicare savings program and Extra Help. Or apply for Extra Help directly through Social Security. It is free. Do not disqualify yourself in your head. The income limits are more generous than most people assume. If money is tight and you take any prescriptions at all, that is the single highest value phone call you will make this year. Now let me show you what happens when one person actually claims all 6. Let me bring all 6 of these back to one real person. I once sat down with a woman I will call Margaret. She was 72, a widow living in a paid-off home just outside Toledo, getting by mostly on her Social Security and a small pension from her late husband. When we went through her situation line by line, here's what we found. She was paying the full Medicare Part B premium every month, pulled straight out of her Social Security. She was paying the full unfrozen property tax bill on a home that had nearly doubled in value over the last decade. She was paying more in federal tax than she actually owed because her preparer had never applied her age 65 deductions and had never adjusted her withholding. She was paying a monthly maintenance fee on a checking account she had opened in 1978, and she was paying full price for a heart medication her doctor had raised her dose on the year before. All of them at the same time. And every single one was something she had the legal right to stop. So we filed a Medicare Savings Program application which took her Part B premium off her Social Security and enrolled her in extra help, a senior exemption and freeze with her county, which cut her property tax bill down and locked it in place for the rest of her life, a corrected federal return, which recovered money from a prior year and adjusted her withholding going forward, a switch to a senior checking account at a local credit union, which wiped out the maintenance fee she'd been paying for over 4 decades. Nothing about Margaret's life changed. She did not move, she did not sell anything, she did not take on any risk. The only thing that changed was how much of her own money stayed in her account at the end of every month. And here's the part I want you to really hear. She was not gaming the system. She was not getting away with anything. She was finally, at 72, claiming what she had already earned over a lifetime of doing everything right. That is the entire point of this video. Being legally exempt and actually keeping the money are two completely different things. The only bridge between them is the form. The agencies are not going to build that bridge for you. So here is exactly what to do this week. None of it costs $1. First, call your local SHIP office. Ask them to screen you for a Medicare savings program and for extra help. That one call covers fee number 1 and fee number 6. Second, call your county appraisal office. Ask by name whether the homestead exemption, the senior exemption, and the assessment freeze are on file for your property. If any of them are not, ask which form adds them and what the deadline is. Third, the next time your tax return is prepared, confirm out loud that your age 65 additional deduction and the new senior bonus deduction were both applied, and ask whether your withholding should be adjusted. Use tax counseling for the elderly or AARP tax aid. They are free. And while you are at it, walk into your bank this week and ask what senior checking account they offer. That is the fastest small win on the entire list. One last thing. This is general education, not personal, legal, or tax advice. Rules vary by state and income, so confirm your own situation before you act. If this helped you, send it to one person you love who is over 65. It might put hundreds of dollars a month back in their pocket. I'm David Taylor. This has been Senior Money Brief. I'll see you in the next one.